Wow, 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 wow. We've got a lot to talk about today. Happy Friday. Tons of things to talk about today. Let me give you the rundown. One of the things I want you to, just a little bit of fun stuff we're going to do first. If you live in the villages, if you are a resident of the villages or you own a home in the villages, and you have a favorite village, what is your favorite village and why? Right? Like, where do you live? What's your favorite village? If you owned a home here before in the past, or you're thinking about moving, whatever, whatever. I want to know what your favorite village is in the villages, and put that in the chat section. That'd be a kind of a fun thing to actually talk about and why. That's one thing. We're going to talk about 7-day numbers. So a little bit of a change, a little bit of a shift in the marketplace, a little bit of probably a little bit more positive news than probably some of the better news we've seen in the last 3 to 4 months. So we're going to talk about that. So we're going to talk about 7-day numbers in the villages. We're going to talk about interest rates. We're going to talk about housing starts nationwide. We're going to talk about recession because there's a lot of word about that and a lot of fear and worry about that. We're going to talk about property of the villages stats and some things of that nature. So chock full, buckle up, relax, get some popcorn, a lot of information that I think is going to help everybody. So from an informational, just in the know, you're going to get a lot of information like that. You're also going to get a lot of information today about whether you'll be able to use this information on whether it's a good time to buy or whether it's a good time to sell, right? You're going to be educated on the marketplace. Even more than in the past. Obviously, anything that you see on this channel is super informational. I'm more informational than entertainment, right? Like, I know some people have fallen asleep while I've done the video. Kidding, but not kidding. So it's not the most, I just think it's interesting to know, and I think educational. More information you have, the better off you are. So, all right, so let's jump into it. The first thing I want to show you, let's actually jump into obviously, leave your comments in the chat section is something that would be great for you to do. But let's share. I'm going to do a share screen with you guys so you can see some real interesting stats. So we're going to start with what's on the market right now. Okay. So on the market right now, we are looking at. Let me make this a little bit bigger for everybody. So we're looking at 226 properties on the market as we speak. 226 properties on the market. That's what we're looking at. So what does that mean? What does that mean? That means we've actually gone down in the number of properties on the market. So pretty much from the beginning of March all the way to this point, we've seen an increase in inventory. Like, we've gone from the 80 mark to 90 to 100. And then we've seen a steady climb in inventory. One of the things that I've noticed over the last couple of days, and it just wasn't time for me to do a show or a video for you guys, is new listings. The new listing number for the last 7 days in the villages on the MLS side is 32. New listings 32. A little bit less than what we've seen, but right around the same number. Sold or closed 29. Price decreases 37. The number to pay attention to is the pending number. The pending number has gone up by somewhere between 6 to 10, meaning 35 under contract. So we've seen a little bit more buyer traffic and some more traffic as far as the number of homes that are going under contract, 35. This number, 35, being bigger than the 32 listings. Hence, we're seeing less properties, and we saw 2 that went off the market, 6 that canceled, 1 withdrawn. So if you add all this, is a little bit less, little less number in properties that are on the market. Meaning, some people got tired of being on the market. I've heard of that, from some of the sellers. They didn't want to be on the market anymore because they pushed the envelope so high, and it was obvious they're not going to get that price anymore. People being a little bit more realistic. So really, for the first time in 4 months, we've seen more properties go under contract than actual new listings coming on the market. So that's a big takeaway. And as always, we've seen shifts. We've seen 3 or 4 really major shifts over the, since pretty much, beginning of 2020 with COVID, that type of thing. And I've reported on it. So this is the first time we're seeing a little bit shift. Is this a temporary thing? Is this, okay, just a short term? Okay, now that we're past 4th of July, and I've heard that from some of my agents as well, where 4th of July, we saw this last year, it was like really, really slow and then picks up after 4th of July. We'll see if that's the case, or maybe it's just a temporary 1 week, one off. What I've seen pretty much for the last 2 years is normally we're not seeing just a one off. Usually it's a streak, and we'll see if that's the case this time. Maybe wrong, maybe right. What that could mean is, if this is a trend, is that we're seeing a little bit of a leveling off inventory, a little bit more balanced, because we were seeing sharp declines in number of solds and sharp increase in the inventory. And that kind of freaked people out. Like I'll just tell you, like sellers were nervous. They're still nervous as well. Buyers were making ridiculous offers. So a lot of people went to the extremes, which tends to happen when there's a big shift in the marketplace, like what we've seen. And when you see an interest rate hike from 2.5 to 5.5, rapidly, that kind of shift, that's going to jolt the market, and things are going to happen. And I think people are getting used to maybe a new norm. But we'll see. We'll take a look. We'll figure that out with time. But the big story is inventory leveling off, a little bit of a decrease in inventory, slight decrease, not the sharp increase over the last 12 to 13 weeks in inventory. So maybe there's a leveling off there. And of course, if you missed the first part, leave your comments. What's your favorite village? If you're in the villages, you live in the villages, what's your favorite village? Okay. So one of the things we're going to do is we're going to start looking at, the impact of, recession. So let's look at this particular slide here that you're looking at is basically mortgage rates and recessions. Okay, let me see if I can, hopefully you can see that. Basically what we're seeing is, let me blow it up a little bit more. Okay, good. You see a little bit better, mortgage rates and recessions. So, when we're looking at this big spike here, where you're seeing, back in the late 70s, early 80s, and a lot of you remember that. We did a show on that several months ago, and we talked about, what was your interest rate when you first bought a home, what was it? And if you didn't chime in then, chime in now, like 18%, to 13%. Everybody remembers that from that time period if you were around. And then obviously, during that time period, when you're looking at a recessionary period, obviously that was in a recessionary period. Like there's labels, this yellow marker shows you when the recessions were. And, then you take a look at the, early 90s, we saw some recessionary period. Look at the interest rate there, 8.8 to 11%. And then obviously we saw, back in 2020, or I'm sorry, this is actually 2002, right around the, right after the 9/11 period. And then of course, the deep recession, borderline depression that we went through in 08, 09 due to the housing crash. And then of course, this is what happened, when COVID hit. So, there's not really, I mean, I don't see any major. It's interesting as interest rates have gone down ever since. I mean, we've been on this 40-year run from 1980 all the way to this point of interest rates sliding down. That's what this tells me, right? And look at the 30-year fixed interest rates. It's like doing this. So we're probably overdue for interest rates to go up, obviously, because we've been in this low slide. And if you look at, the real estate market was an okay real estate market for buyers and sellers, more of a balanced marketplace in the early 2000s, and then went crazy, from 06, 07. And then even when things got really dark, interest rates dropped a little bit, but they didn't drop as much as they did like in this 10-year run from 2010 all the way to, 2021, 11-year run. So I don't know, that's kind of interesting numbers. I don't know if there's a big correlation between the two. So that gives you something to think about. Let's look at single family housing. Let's take a look at that. Let's look at housing starts. And I'm basically painting a picture for you because I think it's It's going to make more sense shortly. Okay, let's look at single-family housing and units completed. Now, I shared this slide. In the, sorry about that. So number of people that are in the market right now that are looking to buy, you're talking about that many millennials. That's a really big deal. That's a really big deal. In fact, let me pull up that particular slide so you can actually look at. Let's see here. Let me pull up something that would be useful for us. So give me a few minutes. Give me a moment on that. I'll find it. But that's what we're seeing. Just a little bit of a recap. Less inventory coming on the market, which I think is a good thing. And also inventory basically leveling off, I think is probably a good thing for a lot of people. Okay, let's do a share screen on this. Found the slide. Let's look at that. Let's see, window. Here it is. Okay, this particular slide here, where it's talking about U.S. population by generation, is what I'm talking about. Like the millennials that were born, these are people that were born in that 81 to 96 range. Look at that. Like they far outweigh the baby boomers right now. And remember when the baby boomers were in this age bracket, that's basically, we're talking about over 40 years ago, right? And that, 35 to 40 years ago, that was back in the late 70s and 80s when the interest rates were high, but also they were moving into they were still buying no matter what. right? Even though there's a high interest rate. Okay. So that's something I want you guys to really look at. You know, basically we're looking at, also I want to share this with you. Let me share these numbers here. I'm looking at the property of the village's numbers, just to give you a comparison as far as inventory. Under 300,000, the property of the village's inventory right now, 18 properties under 300,000, between 300 and 400, 81, between 4 and 5, 69, between 5 and 600, 57, and then 600 plus, we're looking at 104 properties, so about 329. So there's more inventory right now in the resale market. So there's, you know, combined 329. I don't remember who had asked that, but somebody asked how many properties are available at the moment for property of the villages. And that gives you an idea. We've got 226 on our side. And remember, we don't handle new construction. So that's something that I think is advantageous for you. So we talked about recession. Okay. There's some people that are saying, okay, recession is definitely out there. There's definitely, you know, some people are saying it's going to happen. Some people are saying we're already in it. And if you look at the nationwide numbers, basically recessions don't necessarily equal bad real estate market. So, you know, recessions basically mean, you know, just a negative growth. Doesn't mean it's the end of the world. It just means negative growth. And based on the growth that we've seen over the last couple of years, that's probably an okay thing. We know that the housing starts, we're still seeing an increase in housing starts. The numbers I've seen nationwide is that we're $5 million homes short of what we actually need, which means that the homes up north in certain markets are actually, they're still selling, although inventory has grown and the markets have mostly cooled off in many markets. And we're also seeing interest rates level off over the last couple of weeks. So with that, I think there's some normalcy there. And that's right. So Florida Clay is saying, yeah, interest rates have actually gone down a little bit. Yes, they have. Just a touch, I think quarter point, I believe, maybe half a point. But they've gone down a little bit. And I think because of that, that's why we're seeing a leveling off of, okay, inventory's not dropping, you know, not increasing at the rate that we've seen the last 4 months. I think bottom line is this. I've gotten this question, probably the top 2 questions. Is this a good time to sell? Is this a good time to buy? And I think what we have to look at is obviously only if, number one should always be your motivation. And if you feel like, you know, this is a great time, I've got to sell because of this situation, or I've got to buy because I want to improve my lifestyle, whatever. As far as timing anything, I think we might as well throw that out the window. We're not timing anything. We can say maybe things are going up, going down, but timing anything, there's no way we could have timed that. Literally 90 days ago, the peak of the market was here. Like nobody said, okay, we're at the peak now. Today's the, you know, it's April, whatever. Like this is the peak or the trough for that matter. We're going to time the bottom. We're going to wait until it gets to the bottom. You never know. Nobody ever times that perfectly. Now, I would say right now is a very interesting time to buy. And why? Because you have an opportunity to actually buy something with less competition. Can you make an offer? Yes, you can make an offer. 90 days ago, 4 or 5 months ago, you could make an offer. You made an offer, people would laugh at you because they had 4 other offers waiting. Now, buyers have a little bit of flexibility. I think it's a good time to buy from that standpoint. Interest rates, like Florida Clay is saying, it's true. Interest rates have come down a little bit. Is it going to be a better time down the road? Maybe. Maybe it's a worse time. Maybe. We don't know. Right now is a good time. Selling, I think, is also a pretty good time. It's an unusual time where it's good for both sides, because not only can buyers buy with less competition and feel comfortable that because we've heard this a lot of times, buyers are like, I don't want to be in competition. I don't want to compete. I don't want to like go up and bid and like it's an auction. I don't too much stress. I don't want to overpay. Great time to buy. Sellers, great time to sell. Why? Not as good as what it was 90 days ago, by the way. But it could be less. It could be with more competition. If inventory goes up, then there's going to be more competition. Now that we've seen that the inventory is flattened out, I think it's a truly balanced marketplace. We're actually having open dialogue and normal conversation between buyer and seller. So if you have questions, leave your comments in there. It'd be fabulous. you have questions, connect with me, 352-572-3796. Some people are surprised when they call or text me like, oh, is that you? Yes. So if I don't answer the phone, I'm probably with someone else, but leave your comments here. If you have questions, let me know. Buy Sell the Bills is our website. You can check us out there. And leave your comments on your favorite village. What is your favorite village? You live in town. What's your favorite village? I'm about 9 minutes in and sound has gone off. I'm not sure why. That's interesting. Hopefully you guys can still hear me. And hopefully everybody has a great weekend.